I always joke that Ferrari is the best recession-proof stock to buy. The stock is down 20% over the last months. It doesn't happen very often. In fact, it's extremely, extremely rare. It only happens once every 5 or 7 or 8 years. It's extremely rare, down 27% from its all-time high. So I have to talk about this one, especially since a lot of you keep asking me, please give us stocks outside the United States, give us international stocks. Why do you only talk about US stocks? So I'm going to talk about Ferrari a little bit and give you my fair value on this one, as it's a unique stock that's not going to be disrupted by AI. It's going to be here 5, 10, 15, 20 years from now. Pricing power, recession resistant. I'm going to talk about it. So I really hope you enjoy it as always. Now, Ferrari is again a very unique business model. On their presentation, it says Ferrari forever. Ferrari is forever. And since Ferrari has started producing cars, they have produced only 330,000 cars, and 90% of them still exist, which is astonishing. And Ferrari mainly focuses on scarcity. They're not much about mass volumes like, I don't know, Volkswagen or Mercedes or other cars. They're more about scarcity, which is why they have the pricing power that they do, which is why whenever we had tariffs, Ferrari came out on X and they said we're raising prices by, I believe, 10%. And people were like, yeah, whatever. I mean, people are spending a few $1,000,000 on a Ferrari. They don't really care if we have tariffs or not. If prices went up 10 or 20 or 25%, it's a Ferrari. They're gonna go and they're gonna buy it. They don't care if the dollar is up or down, or if the euro is a little bit higher or a little bit lower. They don't care if we have a higher or lower interest rates. They don't care if we have a recession or economic weaknesses. They're gonna go and they're gonna buy this car. And it's so amazing again that the company is giving us 2030 guidance. I don't know any auto manufacturer that's giving 2030 guidance. Most of them, they don't even know what they're gonna make next quarter. And this company has so much visibility because whenever they announce a new model, they're pretty much booked to 2, 3, 4 years. They have a backlog. So they have such a long backlog that they know what they're going to make from now to 2030. And to me, this is amazing. Now, if we break down their business model, 90% of it is through cars and car parts, but they have 10% of it where they've been expanding more into their lifestyle kind of business, which is mainly personal luxury good, a lot of, bags and clothing and other things around collectible within Ferrari and experiences around Ferrari. And it's now 10% of their business. And to me, I found it a very interesting expansion from the company. Now, if we look at the margins of this car company, you could say, they have 51% gross margins. I don't know any car business that has 51% gross margin. This is more of a tech company. 51% gross margin is absolutely insane. I mean, Monish Pabrai, he always says that Ferrari can have the margins they want. They can make however much money they want. They can make how much ever profits they want. They can charge any prices people are going to pay. They can control the pace of the volumes. They can do whatever they want. This is just an amazing, amazing business model. Looking at their net income margins, again, for a car company, it's 23%, guys. 23% net income margins for Ferrari. This is absolutely, absolutely insane. And by the way, I'm using Fiscal.AI to come up with all those charts. And if you want to try it out, they give you 2 weeks of free access if you want to use my link down into the description. But for 2030, they put up their model guidance and they want to be 40% ICE, 40% hybrid, which their hybrid models have been, you could say, kind of successful, but 20% Electrica, and this is their new model. I believe it's their first time ever launching a full electric vehicle, and people have mixed feelings about this one. A lot of people were not too happy that Ferrari has kind of launched a full 100% electric vehicle, as it doesn't really, maybe you could say, stand with what Ferrari is for to some people. For example, Ferrari has resisted the temptation to launch an SUV, like Lamborghini is killing it with their SUV models. and Ferrari is still kind of preventing what they stand for, and they're preserving what the company is about. So they haven't really been killing the SUV market, and they've been pretty much having their cars and whatever they do. So that was a very interesting step forward for Ferrari, and I'm very excited to see what happens. And I think it will likely be a success. But again, I'm interested to see how it ends up playing out. Now, for their 2030 guidance, they're giving us all the details. Again, they have the backlog. They know exactly what they're going to make in revenues, in EBITDA, and net income, and free cash flow, earnings per share. It's a beautiful business. And here, again, we're using euros. So revenues, they expect 9 billion euros, 40% EBITDA margin, up from 38.3%. So a slight EBITDA margin expansion. Earnings per share from 8.8 euros to 11.5 euros. So it's around 6% compounded earnings per share growth, which is disappointing to me. To me, this is nothing. I was expecting much more, at least double digits. And Ferrari did grow double digits in the past, and they could do it again because, again, they kind of control their pricing, a lot of pricing power. But the company is also known for being conservative, and then they ultimately beat on their guidance. So they may be trying to be conservative, and then maybe over the next few years, they're going to be raising their guidance again and again and again. This is very, very possible. The company is also raising their dividend payout to around 35 to 40%, which is 3.5 billion total. They're also raising their buyback program to 3.5 billion total for them to buy back stock on weakness. Now, looking at the price to earnings ratio, it's now trading at 34 times forward earnings, much better than 55 PE, where it was in February. It was insanely overvalued. You could argue the stock is still crazy overvalued if you're a conservative investor like myself, but it's better valued now. But you could kind of say it's still a little bit crazy, it's still crazy. But 34 PE is better than 55 PE. It traded as low as 30 PE in January 3rd of 2023 with an average PE of 43 times earnings. Now, to start, I'm going to start with the 36 PE, which is around the current PE, to give you my calculation. And I'm using euros over here, but then I'm going to give you US dollar numbers. Okay, now starting with 880, which is the current earnings per share, I'm putting 6% to 5%. I get around their guidance. The guidance is, I believe, around 1150. I got 1156, very close. PE 36, which is around the current multiple. That would get me $416 per share, or say euros per share. The current price is 326 euros. So this is only 7% CAGR over the next 5 years. And this is including a 1% dividend and 1% buyback, which is not included in their EPS estimate. They said it themselves on the presentation. So in total, 7% annual return, only 38% on the upside. I would rather buy the S&P 500. Now, if you put in 43 PE, which is the average PE on Ferrari, assuming the multiple goes back from 34 all the way back to 43, which isn't impossible, it's possible. Normally, I don't like to bet on it. I like this to be the plus, but it's possible. Now, assuming we get 43 PE, and that could be maybe the best case scenario, even on the best case scenario, using 43 PE, I would get around 10.8% or around an 11% annual return, 62% on the upside, which is really still nothing. Now, normally, whenever I'm buying a stock, I want to try to get at least a double over the next 5 years, or at least 15% CAGR or annual return every single year for the next 5 years. Now, if I look at the price for me to get a double over the next 5 years on the Milan exchange in euros, if I'm using 43 PE, which is the best case scenario, I would have to pay for Ferrari around 250 euros, which is another 22% on the downside from here. If I'm using 36 PE, if I'm trying to be conservative, I have to pay 208 euros. So for me, if I'm trying to start a position in Ferrari in euros, I personally wouldn't pay much more than 250, maybe 260, 270 maximum. And then if the multiple contraction continues, I would potentially dollar cost average down. In dollars, At 43 PE, it's $286, which is negative 24% from here. So for me in dollars, I have a price alert, as you could see here, around 315. So if it gets, under 315, 314, I might potentially, start to potentially, open a small position, dollar cost average down, because I know those stocks will never bottom at 20 PE, 21 PE. But, if it ever gets there, although it's highly unlikely for the stock to go to 240 or 250, I recognize that and I know that. But if it gets there, I'm going to be a happy buyer. And you never really know what happens. I mean, if you look at Constellation Software, that was a stock that people never expected it to sell off, and it's been selling off, which has never happened in its 20-year history. And you have many stocks where they just sell off out of nowhere, and once the sell-off happens, they just keep on going. Meta was one of them back in 2023, and a lot of them. So I did say in my post here that my fair value was 375. But then after I done a deep dive and I looked at the annual report, and then I looked at the presentation again, and I listened to the call, and I did all these things, I realized that 375 was too extreme, and I updated it in dollars to 286, or a maximum of 300, to start a position and dollar cost average down. And again, that was not financial advice. It was just my opinion on Ferrari. Hope you enjoyed the video. Hope you liked it. If you did, all I'm asking is please press the like button and maybe consider subscribing. So I'll talk to you in another video.